Alrighty, hello everyone. Welcome to Short Verticals. My name is Barbara Armstrong. I'm a senior manager and I coach with Schwab. And today we are going to talk about all things short verticals. And so one of the questions that may come up, especially if you are new to this, is why would I want to trade a short vertical in the first place? And so we're going to have a conversation around how this might fit into an investor or a trader's portfolio. We're going to look at a couple of current positions that we have on, and then we're going to spend the rest of the class looking at a new example trades. And we're doing that under the auspices of this conversation around, why would we want to use this strategy and how might it help us achieve our goals. So I want to thank those of you that are here with us live. You're typing into the chat, and I love how you bring this class to life. So hello to Randy and Dawn and Regina and Bob and Greg and Scott and Bill and AJ and Kevin and the rest of the gang. Thank you all for being here. We also have Brett Crowther with us in the chat. He's one of the managers in the coaching team, and he understands this strategy inside and out. So if you have any questions, don't hesitate to ask. If you're watching this in the archives, you too have a voice. And if you've got questions, you can just type them in down below. I do look at those on a daily basis, and I'll get back to you promptly. Okay. So if you are not following me in the land of X, consider this your invitation to do so at Barb Armstrong CS. And just know that there's only one Barb Armstrong. There have been a rash of imposters of late, but know that no coach, me included, will ever reach out and offer you a Bitcoin deal, a crypto deal, private education for just a select few for which there's a fee, or the scariest one of all, if you'll give me access to your account, I'll trade it on your behalf and we can split the profits. These are thieves and scammers. I would never reach out to you with any of those propositions. I will let you know when we have a new live event coming up or when we have a live event coming up, but those are free to attend. Okay, so let's cover a bit of information before we get out to the platform and into our main conversation for today. So know that options carry a high level of risk and aren't suitable for all investors. We have to consider with multiple leg option strategies, which short verticals are, that it involves more transaction fees. And we use the paper money application on the Thinkorswim desktop platform. I think it is a brilliant place to learn. It looks like, smells like, feels like real money, but it's not. And there are some nuances and differences, but this is where I learned to trade. So, I'm pretty fond of this platform. One of the differences is that and the most important one for our conversation today is that short options will never be assigned early in paper money. They can be assigned early in a live account. And have we seen that happen? Yes. Did it kind of freak me out the first time it happened? Yes. So if this happens, and we'll have a conversation around, what to do should that happen on a short vertical, and then we can go from there. Okay, so Harry is saying, why would I ever want to trade a long option when I could do a short option spread? Well, and there are reasons that we might want to do a long option. But you know what? We'll get to that. So I've got one quick announcement, and then we're going to have that conversation. I always go out and have a quick look at what's going on in the markets so that we can choose, are we going to look at short call verticals because the market is downtrending, or are we going to focus perhaps more on short put verticals, which is a more bullish strategy. So the one announcement I have, and this takes us to the end of the year, is that this weekend, if you're in the Miami area, we're doing a market drive event. And if you are interested in joining us, it is not too late. So get thee to Miami. Kevin Horner will be there. Cameron May will be there. And we've got guys from the network, our affiliate, that will be there as well, along with Ben Watson. It will be a really great event. So if you can get there, get there. They have a nice reception at the end of the day, a beautiful breakfast in the morning, and it's all free. You just have to show up. And then there are two-day workshop events, one coming up in Orlando, the first full weekend in December 6th and 7th, and then we'll wrap up the year in Houston. And these are all complimentary to attend. You just have to get there. Okay. Now let's go out and have a look at what's been going on in the markets. And so let's start. Let me just make that full screen. Let's start with the S&P. And so when we look at the S&P 500, it's up almost 25% year to date. I mean, absolutely extraordinary year, like more than double the average return of the S&P over the last 25 years. So, that's pretty remarkable. And, hit a new all-time high recently, at the November 11th. And then has pulled back to this previous resistance level, old resistance becoming new support and bouncing again today. And so it's hard to look at this chart and say, that this is anything other than bullish, right? Right. Just nod your head in agreement. Okay. How about the NASDAQ? Pretty similar, up a meager 23%. And even though, over the last 30 years, the NASDAQ has outperformed the S&P, I mean, this is still an extraordinary year for this index as well, being up 23%. And again, hit a new all-time high, an intraday high back on the 11th, and then has pulled back to this 30-day moving average, and it is bouncing as well. So that's two bulls. How about the Dow? So the Dow 30, it too, bullish, and this is in, third place, up 16.5% year to date, but hard to categorize or look at this as anything other than uptrending. It hit its new, high on the 11th as well, and then pulled back to the 30-day moving average and is now, moving to the upside. So far we're 3 for 3. Let's see, the last one in our little group that we look at day to day is the Russell. And it's down there with the Dow in that it's quote unquote only up 17% year to date. But most people would be pretty happy with a 17% return. And I mean, not the end of the year yet, so things can still change. But, again, hitting that new all-time high, or I don't actually think on this one it's an all-time high, but it's close. Like if I come back to, it's a 3-year high. Let's see if I come down here. Yeah, we were within a stone's throw of it, 24.58, and this was 23.69. So relatively speaking, pretty close to an all-time high, maybe not quite there, and again, pulled back, old resistance becoming new support and bouncing today up almost 2%. Harry's saying that he's waiting for a West Coast event. Well, if you want to see, and I know that some are already posted, Harry, they will be in San Diego in January. So they'll come back to the West Coast at the beginning of the year. So you won't have too long to wait. Okay, so, and that's for those in-person events. And if you don't know where to see them, let me get through this and then I'll show you where to find them. And then here's our VIX. Down around 17. So at the lower end of the range that it's been in since the beginning of July, showing a relatively high degree of confidence. Some might interpret this that way. But, at the lower end of the range that it's been in this last, 4 or 5 months. Yep. And then if you want to look at sectors, here's our sector watch list. I'm going to just pull this down. If you're new to this, I have a group of short videos called Trade Management Mini Sessions. And if you go to that section and scroll to the bottom, if you're not sure of how to set up, customize a script, that kind of thing, I've got a short video on how to do that in a watch list and how to customize charts and all that kind of stuff. But in the last month, who's been leading the pack? Consumer discretionary. And then look at energy, because it kind of had locked down around, last place, or it was duking it out for last place. And it's now, got the silver medal in the last month, followed by financials and then communications in fourth place, just missing that top three podium. And then over the last 3 months, same group, right? Consumer discretionary, financials have been on a tear, industrials, and then energy. And so if you're looking and you're not quite sure of, what sectors to start with or where to begin, these sectors might be a place that you could start. Okay. Now, I said that I would show you how to access. We're going to go to schwab.com and then it's Schwab Coaching. So how to access the live events. And I just posted one for Miami. Sorry, guys. Oops, I didn't mean to bring that. That's my chat so I can see the questions as they're coming up. So yeah, when you come here and you've got live webcasts and virtual workshops, and so these are the webcasts that are going on right now. And so you can see, this morning we had trading futures. James just finished up trading the trend, and next up after me will be Connie with long options. But then if you come over here to in-person events, you can see we've got Miami, Orlando, and Houston. And then we kick off the year in Dallas, the first weekend in January, and then we're over to San Diego. And then Seattle, and then back to the middle of the country, back to Atlanta. So, we've got lots already out here on the books. Okay. And I encourage you, if you live in an area or you're interested in going there and attending one of these events, I'd sign up sooner rather than later, because we can only get venues that are so large. And a lot of these we've had to close the registration on. So like December 6th, the Orlando event, it's full. And the same thing with Houston. Okay. All righty. So back to our regular programming. Let's go back to the Thinkorswim charts. And then let's look at, why might you consider using a short vertical strategy? Let's say you have $1 million portfolio, or, you might say, well, I'm going to take, and I actually do have $1 million. The other account here is $1 million portfolio. So you might say, well, I'm going to set up part of it in stocks that are growth stocks. And then maybe part of it, I want to have some stocks that pay a dividend. And then maybe part of it, and these you want to stay in as long as the trend continues to move up. And so, you might have, a large part of your portfolio invested that way. And be in a buy and hold position, but maybe with a smaller part of it, you'd like to generate some income. Or you may not need the income, but you'd like to continue to grow the account. But maybe you want to take the kids, to Orlando with you and let them play at Disneyland while, you're, honing your investing and trading skills, or whatever it is. Maybe you want to spend Christmas in Paris. I just think that sounds a bit of all right. But, whatever it is, if you wanted to be able to generate income without having to liquidate positions that you want to stay in. Now, what if, and I do treat this class as a companion class to our trading a smaller account. What if you have a smaller account? And so you're saying, I'm not in a position, I'm trying to grow my giant heap, or I may have a smaller account, but I'd still like to be able to generate some income in a conservative, risk-defined way. Okay. So, if that's the way you're thinking, then we can come out here and say, well, how could we use this this short put vertical strategy, given the market is pretty bullish, to help us achieve that. And I had somebody one time type into the chat, or it wasn't the chat, it was a comment on a webcast, that it was stupid to think that you could have a $20,000 account or a $40,000 account and be able to generate income on a regular basis. But if your goal is to generate, say, $100 a week on a $40,000 account, well, you'd be, up 5,000 by the end of the year. Like, that's just over 10%. Is that doable? Well, this year the S&P and the NASDAQ and like all the major indices are up more than that. So it's not stupid. It is possible. And in our trading a smaller account class, we haven't just done that for the last 6 months. We've done that kind of year over year. Now, one of the things about paper money is that in paper money, sometimes you get what we call a paper money fill, maybe a little bit better fill than you might get in your live account. And the other advantage of paper money is that you don't have that pesky thing that troubles so many of us, called emotions, which comes with those 4-letter words like hope, fear, and FOMO, which can cause us to sometimes take our rules and bend them in ways that they shouldn't be bent. Yeah. So let's have a quick look at these 3 trades. Now, all 3 of them are currently, doing well. Costco, we're up 58%. And we have an example trading plan for this class. And it's in that trade management mini session and mini session section, and I'll show that to you in a minute. But you know what? Our goal is to get out at 80%. And so sometimes people will look at this and say, well, maybe 60% is good enough. And what we may want to do is click on this one and come out to the charts and say, well, when we look at Costco, we put this trade on, and here are our strikes at this 920. So we want it to stay above 920. And is it above 920? Well, it's at 952. Now, I mean, what the market giveth, the market can taketh away, but is there any sign yet that this looks like it's pulling back? And so if we look at ourselves and say, well, and look at the chart and say, this looks like it's a trend continuation. And you may say, well, Barb, you have this line drawn here that, indicates it may be, breaking out of a sideways pattern. And I see, whoops, I've been posting some stuff on Twitter today. So I guess I didn't erase my last screen. But, although it has been going in this kind of sideways range, other people might say, well, what I see is a bull flag. And so if you're measuring this flag, you'd expect it, a technician might expect that to keep going. So we're just going to, let this continue to percolate and do its thing. And then there were 2 others when we come back to the monitor tab, American Express and TJ Maxx. So when we look at American Express, and again, I'm going to shorten our time frame here. Is this above the 285? This is the strike that we sold. Is it above that strike? Yes, it is. Does it look like it's about to pull back? Do we have a doji at a ceiling or at a resistance level? We don't. It looks like it's just clipping along. So is there anything for us to do here? Nope. And then how about TJX? And this one, we made a mistake. Can anyone tell me what the mistake was on TJX? When did we put this on? View trade, November 14th. What did we forget? And put it on this day. Go ahead and type it into the chat. For those who've been with me for a hot minute. The example trading plan that we put in, that we created, said, thou shalt not trade a short vertical over earnings. And why might we have had that rule? Because if you go to James's class and you watch some of the programming out there around trading, they'll say, hey, we're going to do a short vertical as an earnings trade. And why would they do that? Well, because volatility tends to be high coming into earnings. And then you have something called volatility crush, where, after earnings, the volatility drops. And so the value of the option drops. And so, when we look at this and we say, okay, well, if the volatility drops, you could do that as an earnings trade, but what can happen over earnings? May I bring up another? Today's lesson sponsored by the letter T, Target. What happened with Target over earnings? It dropped. And so for those who have said, could you, and this was something that came up in a survey, the last survey, was could you go over again what happens if you go through both strikes? So let me just draw two lines here. And let's say that we don't have a trade on this stock, but let's say we had our strikes at 147 and 142. And I'm just making this up. So we have a $5 wide spread. And, it's come up and hit it once, twice, 3, 4 times. This looks like a pretty solid support level. And then what happens here? It goes through both our strikes and we're kind of going like, and then what if we got assigned? And what does that even mean if we get assigned? Well, what it means if we get assigned, because, for those of you who may know, I'm Canadian, French Canadian at that, and it's hard for us to speak without moving our hands around. So I'm doing it in the form of the drawing tool. But this is our short put. And so what does it mean when we sell a put? And for those of you who, may be kind of going like, what does it mean? I'm just doing this short put vertical thingy. Well, what it means when I sell a put is that I'm willing to buy the stock at 147. So all of a sudden this thing has come down and it's now trading at 121. And remember, I position size based on my max loss, which is this $5 wide spread. And let's say I got paid $1.50. So I have position size based on a max loss of 350. And even if I just did one contract, that's 100 shares, right? I'm now down, if I have to buy this at 147 and it's trading at 121, I'm now down $26 a share times 100, $2,600. And on my $20,000 account, that's over 10% of my account, like boof, gone. But what do we have here? We have also bought a put. In trader speak, we call that a long put. So this put that we bought, we have the right to exercise our right. And when we have a long put, what does that mean? It gives us the right to sell. So should this disaster befall you, and I had this happen to me, trading something over earnings, which is, you learn from the school of hard knocks, right? So, and this is the advantage of a short put vertical, is that you're able to define your risk. Our risk was $350. And then this happens and it's prior to expiration. So we have the right now to put the stock to someone else at what price? At 142. So we turn around and we exercise our right to sell that 100 shares at 142. We bought it at 147. Are we sad that we had our max loss? Yes, but are we grateful now that we only lost 350 instead of 2,600? You bet your sweet bippy. Yeah. So we're going to exercise our right. And now how much have we lost? Well, we've lost that $5 a share, but we were paid $1.50 to get in. So even though the stock was assigned to us and it was exercised, now how can we get into more trouble? Is it possible? It is. And do you really want me to walk you down that road? Absolutely, because I want you to think I'm just not being like this uber conservative Canadian wingnut who just insists on being overly cautious. We want to get out of these trades no matter what prior to expiration. And why is that? Because at expiration, now if this were expiration day tomorrow, the odds are very, very low that this is going to rebound up above 142. So if this were at expiration, both contracts would be exercised, both the short and the long, if you weren't called out prior to expiration, and you would you'd be out of the trade. Okay, at your max loss. But what if, and this happened to us with Spotify, and we had our biggest loss of the year because yours truly was in New York at a market drive and not paying attention to this pretend trade, and it closed at expiration. Let me just change the color for dramatic effect. It closed right here, 5 cents above the long strike. So what happened is short put is in the money. It gets exercised. So we ended up buying 100 shares of stock. In fact, we had 3 contracts, or it was 7. We had 7 contracts of Spotify. We didn't even have that big an account. And then what happened to the long put? Well, it was not in the money, so it expired worthless. Now, gratefully, I took Monday off, the stock rebounded. I also took Tuesday off and the stock fell again. And the reason I'm grateful that that happened is because we took a big loss. And then if you look at Spotify now, it has like taken off, which just totally frosts your petunias. But, we got out of the trade and then the next day it rebounded and then it took off. But you can get yourself into a position where you can lose more than your max loss. If it closes in between the strikes and you are assigned and then it drops in value. So sometimes there are rules that you may want to massage a little. This position sizing rule is a rule that in our webcasts and when we're together, we don't break that rule. Another rule that we never break is this rule. What rule might we break? Well, we might say, hey, we're up 75% on this trade and it looks like it's going to turn around. And so we're going to take the money and run. We're going to get out at a little less than we were expecting and exit the position. So does this clarify things for everybody? Because I think this is important. And what was I just saying? I want us to make money, and we've had some big losses, and yet, we're still way up in this account this year, way more than typical. But, we have a set of rules for a reason, and they're there to protect us from our own emotions sometimes, right? Okay, so let me get rid of this, and then I'm going to take just one hot second to say, if you haven't subscribed to this channel, first of all, what are you waiting for? You're going to want to do that. If you've already subscribed, don't hit the subscribe button again or it will unsubscribe you. But you want to go to Trader Talks webcasts on YouTube. And when you first get there, it will show you whatever is either currently playing or what is coming up next. But if you come to playlists and then come down to these mini sessions, and I've got to get cracking because, like I teach a Getting Started with Options series, and we have 10 different strategies. And so far, I've only got like 5 plans in here, but we have one for short put verticals and then one for short call verticals. And this gives us a framework, and it encompasses, what to sell or what to trade, when to trade it, how much to trade, when to exit the position, whether the trade goes for you or against you, and then what your routines might be. And then from this, you can create your own trading plan. But this gives you a framework at least to start with. And I was one of those, like when I started, like I created a little list, and somebody said, can you share your list? Well, I don't use them anymore because I trade every day and, I look at the markets every day. But when I first started, I created I created a checklist. If I was doing a short put vertical, I grabbed my short put vertical checklist, and it was just a way to make sure I was following my rules. And so somebody's saying like, where is the training? It's on, it's in this webcast series called Trade Management Mini Sessions for the trading plans. And then if you want to go back and watch this again in the archives, there is a playlist for short verticals just for this class. And I'm just looking for it here. Here we go. And you can bring up that playlist, and instead of, binge watching Netflix, you can, binge, do some binge learning. Okay. Okay. So now let's go and, we've done our trade review. And let's go put some new trades, example trades on. So back to Thinkorswim. And, I was joking I think I was in the chat for Connie's class yesterday, and somebody was saying like, hey, like what's going to happen before the end of the year? And I jokingly said, they won't let us use our crystal balls here. If only we had crystal balls, right? But we don't. So we can't trade what we think is going to happen. We have to make our trading decisions based on what we see. And what we see here when we look at Oracle, or what I see, is a stock that is up 83% year to date. So that is hard to say is anything other than uptrending, right? It went through this period of consolidation. We have earnings coming up December 9th. Okay, so what does that mean? If we place this trade, we want to be out by the 9th. Can we do that? Well, let's come to the trade tab. Well, we have one expiring December 6th. That's only 2 weeks, and usually we want to be in that 20 to 50 day time frame. So could we even get enough premium? If we came down here, if we want to be below this ceiling, which we're expecting to act as new support, could we come out to this 190? And our trading plan rules are on what to buy. Is the stock uptrending? Do we have an entry? So that's when to trade it. Does it trade more than 1 million shares a day? Check. Is the bid-ask spread tight, like 10% or less? So it's around 10%, so we're okay there. Do we have at least 20 times the number of contracts we're going to trade? Check. Because we're not going to do more than maybe 2 or 3 contracts. So we're going to come to sell vertical. 71 cents, actually, that's pretty good. And why might I say that? Well, like I said, I've done a fair few of these over the years. And so you kind of develop some math skills. So if I say, okay, 71, and how much are we risking? Well, we're risking $2.50 minus 71. So we're risking $1.79. So if I take my 71 and divide it by $1.79, that's a potential 39.6 or 40% return for a trade we're in for 15 days. at the most, because it expires on the 6th. So if we're okay with that return, and our rule of thumb is we want a minimum of 20 to 25%, no matter what. And on average, if we're out 30 days, we'd like 1% a day. Okay, so we're cool with that. How much are we risking? 170. So if we do 3 contracts, how much are we risking? 537. And so we're saying we don't want to risk more than, say, 500 to 550. So if we do these 3 contracts, the other thing, and I alluded to this earlier, I don't know why this, saying single order. I want this to be a first trigger sequence. So we're going to go ahead and put this order in. And then because somehow my advanced order, oh, here it is. I've got stuff appearing, doing wonky things on my screen. And we're going to right click, create an opposite order, and say, we want to buy this back when we've got about 80% of our max gain. So I'm going to round that to 70, say, hey, when this is worth about 14 cents, we would like to take our risk off the table. But regardless, we're going to look at this daily and we're going to close it out prior to the 6th. We're risking how much? $546. How much can we make? 204. We're saying, hey, if we can make, about 150, 160, we'd be happy with that. And that isn't counting our transaction fees. And we're going to put that in our short put vertical bucket. And we're going to make a note, shorter expiration than usual due to earnings. Okay. And this is just one way to handle earnings. Others might, like I said, do it as an earnings trade. And it's a strategy that, a lot of traders might embrace. So you may want to trade both ways in your paper money and just see, how you track your results and see what you're most comfortable with. Okay. I'm banking that Oracle will continue to go up. So like here are the strikes on this. So let me move this to 190. And so we've done a short put vertical at 190 and 185. And it expires December 6th. And we'll show that on the right. And so how is this trade profitable? Well, it's profitable if it stays above 190. So if it goes up, we're happy campers. And why is that? Well, because it will decay at an accelerated rate. So if it continues to go up, we're smiling. Because the more this goes up, the more the value of this goes down. And we want to, sell it at a higher price and buy it back at a lower price. What if it starts to go up and it just goes sideways? Well, we're still happy campers. And we can even be, so if it goes sideways, we're okay. We can even be a little bit wrong in that we've got like $4 worth of wiggle room. It just has to stay above 190. Yeah. Oh, was it 180? Yes, you're right. It was the 187.50. Rhonda, I love people that when you guys correct me, I love it because it means you're paying attention. And that's a compliment. So it's 187.50. You're absolutely right. That's where our strikes are. Okay, so let's do another example. Hair of the dog. By that, say, let's come and look at Shopify. So remember when I said like we got assigned and because it expired in the money and by a nickel, and then it got to earnings and look at that. I mean, it just went nuts. and now it's come back to this support level, and we have this candle pattern that some would call a bullish engulfing, in that the body of today's candle is engulfing the previous day's candle. Now, this candle from 2 days ago is also a sign that this may have found a support level when you have a doji, followed by a hammer, followed by bullish engulfing. Now, it could tank tomorrow, but if we're saying, you know what, I think maybe this like 103-ish level is going to hold. It's currently trading at 106.78. We're on the other side of earnings. Okay. So could we come out and do, 22 days to December 13th? How many contracts do I have here? Well, I've got 13. That's a bit skinny, but I've only got a $10 wide or 10-cent wide bid-ask spread. That's only 5%. So that's okay. 7 million contracts traded. Now, this is a rule that some people might massage a little. And why is that? Well, because you can see we had lots of volume here at the 105 and the 100. These in between dollar wide contracts just opened up. So there hasn't been as much time for these to be traded. But the expectation is that they will likely be traded, which is why the bid-ask spreads are, less than 10 cents here. So if we did the 103, which is current support, and then say the 101, so it's a $2 wide spread. If we're paid 60, what are we risking? We're risking $1.40. So 60 divided by $1.40. That's a 42% return for a trade we'd be in for 22 days, potentially. And so if we say, well, you know what? I'm good to go with that. I'm going to, do my 3 contracts. Confirm and send. I'm risking 423. I might be able to do 4 contracts. Whoops. I can work this. So now I'm risking 560. Am I okay with that? We are. Single order. Now I know it's on this screen over here. First trigger sequence. We're going to right click, opposite order. When it's worth about 12 cents, we're going to buy it back. And so, here's our max profit of 240. We're doing 4 contracts. And so we're saying, hey, if we can make about 200, and remember, what if our goal was to average $100 a week? So if we can make 200 on this trade, then it helps, puts a little extra money in the kitty for the weeks where there's a trade that might go wrong. Okay. And then this buying power, this shows us how much is being tied up. And what does that mean? It means they're taking and setting some money aside just in case this trade goes against us and we lose this $560. Okay. So we're going to put that in our short put vertical bucket. And remember, always read these little notes. It's saying, hey, this is a non-standard, this is a weekly expiration. And we need to be aware of that. Okay, so we're going to put that one in. Now, I had a couple of additional ones that I wanted to look at today, and we're not going to have time for those, but join me tomorrow for trading a smaller account. That's an active trading class. And if you wanted to do some additional practicing, you might want to look at Charter. So here's another, I think I posted an example of this chart on X recently. When you look at a longer term picture, this big cup and handle pattern setting up. So, might that one be an opportunity for practice, or lows? And again, we had this big bowl pattern setting up where it kind of broke out, came back to retested again, and is bouncing today. Might that be a place where one might look at a short vertical? So we looked at why we might consider short verticals today. We looked at, what can go wrong? Because I think it's really important when we look at what goes right to look at, well, what if the worst thing that could happen happened? How would we, cope with that? And then how can we prevent, ourselves getting into a pickle, the likes of which we do not want to see? So, I thank you for joining me today. There is a survey in the chat and I've just reposted it. So if you will click on that link, here's the deal. There's 2 questions. One was I hated it. 10 was I loved it. And then there's everything in between. There's also the ability to put comments in there. So let me know what you thought. Was the pace okay? Are there topics within the short vertical world you would like me to cover that I haven't talked about in a while? Would you like to see more trades, fewer trades? I promise if you fill it out that I'll read each and every comment. Hit the like button. It's a chance to move this content up in the YouTube algorithms, and you could be doing a favor for a stranger whom you will never meet. And then don't forget to follow us in the land of Twitter and subscribe to the Trader Talks channel. Thanks to Brent for his help in the chat, to the guys behind the scenes for making the magic happen, and to each and every one of you for continuing to show up and investing in your future selves. Thank you very much. We'll see you tomorrow for trading a smaller account. Up next, Connie Hill with long options. Bye for now.